when nearby NYMEX natural gas futures reached the lowest price since 1995 in mid-2020, the first clue that the price was heading much higher came just days after the price fell to the low. In early July 2020, value investor Warren Buffett announced Berkshire Hathaway, Break.A, bought Dominion Resources, D, natural gas pipeline and transmission assets for $10 billion. The deal called for $4 billion in cash and $6 billion in assumed debt. The transaction increased Berkshire Hathaway Energy's exposure to all interstate U.S. natural gas transmission from 8% to 18%. Like an obedient puppy, the natural gas price followed Mr. Buffett and was trading above the $4 per MMBTU level on February 14, nearly 3 times the price when the Oracle of Omaha struck the Dominion deal. While natural gas prices have appreciated dramatically over the past 20 months, the price action has been highly volatile. We are likely to see a continuation of wild price swings but will not see a return to the lows that made the pipeline and transmission assets so attractive for one of the world's most successful value investors. Higher lows and higher highs in natural gas. After falling to the June 2020 low, natural gas futures recovered, moving steadily higher through the second half of 2020 and the first half of 2021. The chart highlights the move through the $4 level in July 2021 and above $5 and $6 per MMBTU for the first time since 2014 in September and October. Since the 2020 25-year low, natural gas has made higher lows and higher highs, with the price experiencing wide price swings. A dramatic price spike in late January as February futures expired. In late January 2022, as the February contract was expiring, the price experienced the most significant spike higher since 2005 and 2008 when Hurricanes Katrina and Rita wreaked havoc along the Louisiana coast. The price of the expiring futures contract rose to $7.346 per MMBTU, a level not seen since 2008 when the price was last above the $10 per MMBTU level. The active month March contract rose to $5.572 per MMBTU, a $1.774 per MMBTU discount to the February high. Cold weather across the U.S. and concerns over Russian natural gas exports to Europe combined to cause the price spike. Ukraine's situation likely helped push natural gas higher. The weather and snowstorm were the leading factors as U.S. heating demand rose. U.S. energy policy supports natural gas. The Biden administration shifted U.S. energy policy from drill baby drill and frack baby frack to address climate change. Support for alternative and renewable energy sources comes at the expense of traditional fossil fuels. Increased regulations on hydrocarbon production and consumption have weighed on U.S. supplies. The administration canceled the Keystone XL pipeline project on its first day in office. In May 2021, it banned drilling and fracking for gas and oil on federal lands in Alaska. The increased regulations weigh on U.S. oil and gas production and the supply side of the fundamental equations. Liquefied natural gas for export beyond the U.S. pipeline network is a new demand vertical for the energy commodity. While the U.S. has quadrillions of natural gas reserves in the Marcellus and Utica shale regions, extracting the supplies is slowing under the Biden administration. The energy policy supports higher prices as demand grows and resources are untapped. European and Asian demand continues to rise. LNG suppliers have reported that they are sold out of the energy commodity for the coming years because of long-term supply contracts. They ship liquid gas to Asia, where the price is substantially higher. In Europe, prices have soared as Russia is the leading supplier, and the situation with Ukraine threatens supplies. Rising European and Asian demand and much higher prices in those regions have put upward pressure on U.S. prices as natural gas has become a more international commodity that now travels the world by ocean vessel. Expect higher lows as we move into the 2022 U.S. injection season. Natural gas declined after reaching a high of over $7.30 in late January on the expired February contract and $5.572 per MMBTU on February 2 on the March futures. The chart shows natural gas probed below the $4 per MMBTU level last week and could head for a test of technical support at the December 30, 2021, $3.416 per MMBTU low. As we head into the 2022 injection season, where demand declines after the winter months and natural gas flows into storage in the US, the potential for even lower prices is rising. However, a Russian incursion into Ukraine could cause upward pressure on prices over the coming weeks and months despite seasonal weakness. The bottom line is natural gas is an energy commodity that faces lower US supplies and rising global demand. We are not likely to see a return to the prices at the June 2020 low. Expect higher lows and higher highs in natural gas over the coming years as US energy policy is restricting production. Warren Buffett has been the most successful value investor over the past decades. His eye for a bargain draws him to assets that fall to illogical, unreasonable, and irrational prices when bear markets occur. The transmission and pipeline purchase from Dominion Energy, D, is another example of his investing genius. Natural gas is a commodity that will deliver profits for Berkshire Hathaway, Break.A, for many years to come.